Welcome to the Elite Realty Invest podcast. I'm joined today with Joe from Prosperity, who's the founder of Prosperity Developments. Thanks for joining us, Joe. How are you?
You're welcome. I'm very well, thank you.
Good. So for a lot of our investors, they understand the developments and we explain them to them, but it's great for them to get to know the brains and the people behind these schemes.
Okay.
So I thought it'd be great for them to be able to understand, I suppose, what inspired you to create Prosperity Developments in the first place.
Okay. I'd been a developer previously to Prosperity, and I'd developed in Cyprus and in Greece, and also done some developments in the UK. This was post 2008, so luck rather than judgment. We came out of 2008 quite well. The developments that we'd been developing, we'd finished and we'd sold, so there was no real kind of downside. Other than the fact that from a funding perspective and an appetite perspective, it really wasn't a time to be selling property. So we seeded what was Prosperity Developments from our profits from our previous developments. And the objective at that point was to buy distressed assets from West Register. So post-2008, the government took a lot of development sites back in the UK, and then they put them into a toxic bank and they held them there, and that was West Register. So we contacted West Register and spoke to them about buying some of those assets out. So we started the business really as very much an opportunistic play in the property market. And originally we were going to buy these assets, we were going to finish them as developments, not really anticipating there was much of an appetite for them to be sold. Meantime, we spent some time in the Middle East and the Far East, really talking to expats about either investing with us, but their appetite was really to buy the underlying assets. So they wanted to buy buy-to-let property at a point where they thought it was a good a good price to join the market. So quite quickly, we were buying half-finished developments that other developers had failed on. Right. We were finishing those developments to a ready-made market, which were expats based in Asia, Singapore, Hong Kong, Middle East, and they were buying them to rent them. So the business was in no way sophisticated at that point to deal with, I suppose, the client-facing element. So that was really where we needed to do the work. So the development has been a sort of an ongoing strand through my career. But I think it was just really working with clients, understanding clients, what they wanted, what they were looking for. So really at that point we were delivering a similar sort of product, but without the same sort of facilities as we've got now as a group.
Yeah. So what drove the change, I suppose, to go from taking a distressed asset and completing it to then building luxury, high amenity developments in sort of central locations? So I guess that's a bit of a change.
So I think, we just evolved really with the market. So, one, there were only so many of those distressed assets that we could buy.
Yeah.
It's recognised now that majority of those, the government held on to a lot of those assets and traded the way out of them slowly, which obviously was the right thing to do because the market recovered quite quickly. So once we'd finished those, we started looking at other opportunities, and then went into the traditional sort of developer strategy. Although, because we've always been very focused on the buy-to-let investor, different obviously to the PLCs that are looking for sort of different demographics for where they buy. We're very much looking for and focusing on areas of strong demand from a rental perspective, and that comes with strong demographics in relation to strong employment base, a lot of employers, good schools, so all the things that people want from a rental perspective, really.
Yeah. No, I know what you mean about keeping up with the market, because I remember when I first rented, I didn't have a concierge. I didn't have any amenities. But now everyone is looking for that higher quality of living in city centres. They want the amenities, the work from home spaces. Sure. It's the new norm.
Yeah. It was quite late coming to Birmingham. And as an untested model at the time, I wasn't convinced that the Birmingham market was the right place for kind of high end rental spaces. I saw it in London, and then it kind of came to Manchester, and it worked well in Manchester. I always saw London as obviously a different market, which it always has been, and from an affordability perspective, questioned whether the rents that were needed to be achieved to validate such a scheme where you've got that much amenity, and whether that was going to be acceptable to the market. So I took my time and really we waited to see that the demand was there. So and then looked to do something better than what's currently available.
Yeah. No, it's I think it's important because you're quite right. The market has just moved in that direction, and slowly everywhere's catching up. And the new tenant bases, I suppose properties now are somewhere to live, but also a lifestyle.
Yeah, I think these are communities ultimately. I think it's a different sector of tenants that have got high expectations, and the market is delivering products in different segments. We still do different segments. We still supply different properties at different price points, for different tenants, different owner occupiers. So we really try and have a spread and a range of products that will facilitate different markets. But for the high-end Birmingham market, we are creating a product which has never been seen before with the level of luxury. And my vision for Smithfield was always a sort of a 5-star hotel experience. So yes, the concierge, and yes, the facilities that other developments might offer, but a level above that from the point of view of the feel of the building, the textures that we use in the facade that we've designed, and then the way the amenity spaces work. I think it's really important to deliver something that people feel almost hotel-like, and our staff in these developments will be 5-star hotel staff trained.
No, well, sounds amazing.
Yeah.
So from sort of taking the distressed assets, moving into the sort of luxury, and I know you do housing as well, how's the journey been so far?
Interesting. Yeah, I think, development's a challenging business. The landscape's always changing. We've seen, certainly the last few years, COVID, which was a fantastic time for our business. I think as a lot of developers would agree. A lot of activity in the market, but challenges around inflation, huge inflation costs and increases, very difficult to sort of really drill down on what a scheme would cost you to build. So that comes with its own challenges. And then we've drifted now into a sort of, high interest rate period. So there's always a different challenge, on the horizon. But the fundamentals remain, in Birmingham and in property in general, that it's that supply and demand ultimately. So year on year, we've continued to grow as a developer, and, looking to continue that way.
Yeah, I mean, I'm right in saying that despite the market challenges, you delivered over 500 apartments and houses last year?
Last year, we handed over 576 homes.
Great.
So a mix of conversion work that we've done, and new build. So 2 major schemes in Birmingham, JQ Rise and Parkview, and then we've started handing over our first homes at Broadoaks. It's
because buying an investment is a 6-figure purchase, and it requires a lot of capital to get going. Now, you offer the most attractive payment plan in the market. I was just wondering what inspired you to bring that payment plan and really how you're able to achieve it.
Sure. Well, it came about from the time that I spent in Asia and the Middle East, reference where we started the conversation. A lot of the expats that I was talking to them about what they were investing in at the time. And a lot of these were insurance-backed products. So they would buy equities basically, and they would pay for them on a monthly subscription model. So they were invested into the stock market, but it was structured in a way through insurance companies where they could invest 2,000-3,000 a month basically. So as I came away from that and having spent some time there, it seemed an obvious choice to me to be able to take that model of a monthly subscription model, but really buy assets, i.e. homes and properties for rental, rather than buying equities.
Yeah, it's just amazing because we speak to a lot of investors who may have a small portion of the funds ready, but they haven't got maybe all of the money that they need right now,
Yeah.
but they might have jobs or bonds maturing or whatever it may be where they can afford the monthly payment.
Yeah.
And now we've got investors from all walks of life who are able to get involved in these investment opportunities in these high growth areas.
Sure. I mean, ultimately, buy to let or investing in property is kind of a, high net worth proposition, I think, generally, and still is to a point. So to be able to offer a product that more and more people could get involved in through the monthly subscription model and the monthly payment plan, that's something obviously that's been the backbone of Prosperity, really. And we're fortunate as a developer to be well funded. We've got a strong balance sheet, so that allows us to allow the payment plan and allow for people to pay on a monthly basis, because we don't need that money to build the development. So whereas other developers, I think, need to take large deposits as part of their construction monies.
Yeah, because it's required for the build costs.
Yeah, so we don't work that way. And I think that offers an extra level of security, because we're building it as you're paying for it. So it's not pay us today 10 or 20%, and then we're going to start building it. They'll start the payment plan, and then we're already underway with construction. So as they're getting to 50% of their deposit in, there should be circa 50% of the building being built, and onwards then up to completion.
You will have heard it before, but when we talk to investors, it's all about investing in the right location. You'll know the TV show, location, location, location.
Sure.
And we're very fortunate that Smithfield is arguably in the best regeneration zone in the whole of the UK.
Sure.
But I thought maybe you could tell the investors maybe a little bit more about that, and how what your vision is, and how you came to building this scheme in this area.
Okay. Yeah, I mean, it's been a long-term play for us. 9 years in land assembly and planning. So as a strategic position, it was an opportunity to change, I suppose, the face of the centre of Birmingham. There's been a migration in Birmingham from the sort of what they call the Southern Gateway into Smithfield proper, where it is now, and that's the city's view of where they want the centre to be. So Smithfield is and will be, when constructed, the centre of Birmingham. It is geographically, and that's where the city will position the centre.
So it's a whole new city centre.
Yeah, I think Birmingham's evolved a lot over the last sort of 10 years. And whereas we started out with a 5-year plan, so it was bring employment, make it more connectable, build more homes for people to live, and then the rest of it sort of followed on from there. So obviously we got HS2, which sadly doesn't go any further than Birmingham, but it does go to Birmingham. So that's a kind of a key anchor of that location. It's so Smithfield was the largest regeneration play in Europe. It was the largest unused landmass in Europe. And if you take a drone and fly over the city, you just see this big hole in the middle of it, totally undeveloped and been flattened. So this is the second cycle now for Smithfield. So it didn't get going the first time. It missed the cycle. So, we were keen when we were in this second cycle and had the opportunity to start assembling land there, to amass as much as we could to have a significant stake. So where we are now is there's Lendlease, who are the largest, currently one of the largest global developers. So they're based in Australia. So they're building out all the council's land. So they'll build the retail, leisure, commercial. They'll build a lot of work around the River Ray and the central pavilion and the festival square. And then we're doing the residential element, which culminates in 711 units. But I suppose to answer your question, it's a supply and demand point in Birmingham generally, and then you've got that connectability. This site is within a 2-minute walk from a metro station, every single unit, and it's a 13-minute journey to the HS2 stop with connecting then into the international airport and then going on to the outskirts of Birmingham.
It's funny because we talk about supply and demand, and it's a huge scheme, but 711 units isn't really that many. So
No, it's not. I mean, if you think we've delivered 400 units in the last 12 months in Birmingham, as in handed over, and we've let those down very, very quickly. It's a drop in the ocean, really. So, I mean, what might sound like a big number. The other thing is when you're in Birmingham and you might see lots of cranes, there's not actually, a lot of that doesn't actually relate to residential. And of that residential, it doesn't relate to residential that you can buy. So there's some of the big funds there building BTR purely for rental. But outside of that, sort of 60% of the cranes in Birmingham are building infrastructure, or commercial. So what might look like lots of cranes building lots of residential apartments, if you actually do your homework and look at what's available at any one time, there's actually very few apartments that, as an individual owner, you could acquire.
Yeah, so the scheme's important, but there's still going to be huge undersupply even afterwards.
Yeah, for sure.
Yeah, definitely. So this scheme, it's got a couple of different phases, and the final phase, which we're working on now, is Smithfield House.
Yeah.
Now, I know that that's an entirely different brand, different to the rest of the whole scheme.
Yeah.
But I think it'd be great to understand from you, what is the house brand that you're creating and how is it different to all the other phases?
Okay. So the house brand for us is another demarcation in the industry. It's another way that we can differentiate ourselves from other developers offering similar products. So it's really it's high-end amenity. And the house brand comes with additional homes that will be available for the tenants. I'm afraid not for the landlords, but for the tenants. So as a list of amenities, we'll have our private dining, our gym, open spaces for work, quiet areas, communal spaces, and other facilities for leisure. Alongside that, tenants want to get out of the city at some point. So within the offering, there's a country house, and we started with house brand of Smithfield, and it will continue into other developments where we'll buy other houses, both in the UK and other major cities, for our house tenants to use. So a tenant in Smithfield House can ring up the concierge and book a weekend away. The first house, which is owned by Smithfield House, is on Lake Windermere. It's on the lake, so it's a 2-bedroom property, and that's an additional amenity for those tenants to use.
So I'm a landlord and I put my apartment up to rent, I can say included in your apartment is a weekend away in the Lake District, and
sure.
that's just included in the in the property.
Yeah. So so one will achieve slightly better rentals, thus better yields, and it's something different.
Yeah, I've never heard of that. You rent somewhere and you get access to, I guess, a countryside retreat.
Yeah.
It's great for the tenants.
It's the best of both worlds.
Yeah, no, it really is. It really is. Well, I really appreciate your time today, telling us about the company, telling us all about the development. I'm sure our investors will really appreciate it.
Welcome.
See you next time.